Good morning. I am Kenny Polcari, your host of the party, and today is Monday, September 26th, 2022. And what is it that you need to know? Well, on Friday, the Dow theory got triggered and stocks went lower. The S&P kissed the June lows, but it held. Today's another day for us to retest that. Oil traded lower on Friday. It's again lower this morning. Think the stronger dollar and the global recession narrative. Do not expect OPEC to just stand idly by. And Italy yesterday elected Giorgia Meloni in a snap election, and CNN is going bonkers. So what are we having for dinner tonight? We're going to have the Garganelli with sweet sausage and a tomato cream sauce. It is truly spectacular, easy to make, but so good. Okay, I'm also wanted to start talking once again about the market-wide circuit breakers, right? Just because I think it's important, the market feels anxious, and people should just be aware of what those levels are. Level 1 means the S&P would have to lose 258 points or 7% to trigger a trading halt for 15 minutes. Level 2 means the S&P would have to lose another 6% or 480 points to trigger a second halt for 15 minutes. And level 3 means the S&P would have to lose a total of 20% or 738 points based on Friday's S&P close to halt a close for the balance of the day. Okay, on Friday morning, I was on Varney and Company at 9 o'clock with Stuart Varney, and during that block, I discussed how the Dow Industrials had not yet broken the June low, 29,653, which was set on June 17th. But the Dow Transports had broken their July low. I say July because July was lower than June for the transports. And if the Dow theory held true, then the industrials had to break the June low in order for the theory to be validated, which in the end would signal more weakness ahead. Right? You can find that clip if you go to foxbusiness.com and you search for my name under Stuart Varney. At 10 o'clock on Friday morning, 10:02 to be exact, the Dow Industrials breached that low and proceeded to tumble from there. The algos reacting to the technical signal, sending wave after wave of sell orders into the market, and that sent stocks into a tailspin. Remember, when the algos get triggered, it triggers a two-way reaction. The first is the automatic cancellation of inline buy interest, which then creates a void in prices. And the second is the wave of sell orders that are then generated because of that technical signal. Now look, it works in the opposite way as well, right? When the signal is to buy. In this case, it was a signal to sell. And then the humans step back and the chaos reigns, and so it was. At 3 p.m., the Dow Industrials made a new low, falling 826 points to 29,250 before rallying back into the bell. The S&P did not break its June low. It came within 11 points. But today, we can test it again. There's more about that in a little bit. By the time the bell stopped ringing, though, it was clear it was another losing day, capping off another losing week. The Dow ending the day down 480 points or 1.6%. The S&P lost 64 points, 1.7%. The Nasdaq fell 200 points, 1.8%. The Russell lost 43 points or 2.5%, while the transports gave back 225 points or 1.8%. And just to be clear, the Dow Industrials not only broke the June low, but has now created a new 2022 low, 29,250, while also establishing a new 2022 closing low of 29,590. The transports also collapsed again on Friday and made a new 2022 intraday low of 11,960 before closing at 12,129. So the theory has been achieved. Now it's just a question of how deep will it get. Now look, why are we surprised? Haven't we been discussing this for months now? And with every day that passes, we get more information about an economy that continues to show signs of economic stress. Over the past week, we saw a bevy of central bankers around the world raising interest rates in their countries, and that only added to the angst, and rightly so. Because most of these central banks are well behind the eight ball and well behind the Fed. And the Fed itself is well behind the eight ball, considering that inflation in the U.S. is now running at 8.3% year over year, while the federal funds rates is now 5% below that at 3 to 3.25%. That is not good, and we found that out because every Fed member is telling us so. And now they started to showcase anyone considered influential through the media. Last week it was Janet Yellen who assured us that she is convinced that JJ will be successful in bringing down inflation, saying that at some point next year, we should start to see the benefits of his decision. Some point next year, let's just make that clear. Then on Sunday morning, Atlanta Fed President Rafi Bostic told Margaret Brennan on Face the Nation that there's a good chance that the Fed will get to 2% inflation without killing the economy. In fact, he recognized that there's going to be job losses and said that he thought they would be smaller than what we've seen in other situations. And he also went on to say that he thinks they can navigate a soft landing if they try really hard. And I say, are you kidding me? A soft landing? Dude, wake up. I mean, you have to wake up at some point, right? Even your colleagues are now conceding that that narrative is gone, right? They're now calling it a modest landing, which is really funny because up until now, there were three definitions of a landing, right? There was a soft landing, a hard landing, and a crash. Never has anyone described the landing as modest before. But hey, look, it's 2022. Just change the rules. I mean, look, men can even have babies now. It's an amazing time we live in. So I guess it can be a modest landing if that's how they want to choose to define it. Overnight on Monday, the world heard from ECB President Christine Lagarde, right? So last night while we were sleeping, she got up and she talked about the state of affairs. At 3:50 p.m. today, we're going to hear from Cleveland's Loretta Mester. Tomorrow at 6 a.m., it's going to be Chicago's Charlie Evans. At 7 a.m., we're going to have J.J. Powell, who's going to be participating in a panel on digital currencies, which is very interesting. Wednesday, we're going to hear from J.J. again at 10:15. At 11 o'clock, we're going to hear from Governor Bowman. On Friday, we get Vice Chair Brainerd at 9 a.m. and Governor Bowman again at 11. Now, I'm sure we're also going to see St. Louis' Jimmy B on CNBC at some point. And don't discount Minneapolis' Neely Kashkari or San Fran's Mary Daly or New York's Johnny Williams, because they all will have something to say. They will surely try to continue the narrative that we've got this. While it may be difficult, we expect to be successful. Well, duh. Of course, at some point, it will be successful only after they destroy the economy. But if you think it's going to happen anytime soon, like, 2 or 3 months out, you better go stick your head back right in the sand, because that is not happening. Last Wednesday, remember, we saw the Fed raise rates by 75 basis points, which was expected. But then JJ surprised the crowd by telling us that they will most likely have to raise rates by another 75 basis points in November in order to get to a new terminal rate, right? The rate defined as neutral, which is now 4.6%. That's up from what they had been telling us was 4 to 4.25%. And that was the straw that broke the camel's back and initiated kind of the sell-off that we've seen, at the end of last week. By the end of the week, the 2-year Treasury was now yielding 4.295%, while the 5 years yielding just over 4%, and the 10-year is now knocking on the door at 3.75, the highest that has been since 2011, leaving the yield curve completely inverted, now entering week 15. And this move continues and will continue to put pressure on the broader market. Every sector on Friday was bleeding. Energy getting absolutely slammed, losing 7%. Consumer discretionary is down 2.3. Basic materials down 2. Communications down 2. Industrials down 1.8. Financials down 1.6%. Consumer staples down 1.6. Real estate down 1.2. Utilities down 1.2. And healthcare down 0.5%. Yet again, the contra trades were surging, right? The PSQ up 1.6, the SH up 1.8, and the DOG up 1.6. The SPXS was up 5%. That's the triple levered S&P short. It's not made for everybody, and it can be very dangerous, so buyer beware. Economic data out today is all about the Chicago and Dallas Fed surveys. What's going on in those regions of the country, right? Chicago is expected to be 0.23, while Dallas is expected to be -10. On Thursday, we're going to get the second revision of second quarter GDP. And guess what? It's still negative at negative 0.6%. Capiche? And on Friday, we're going to get the PCE core deflator, which is the Fed's favored inflation gauge. And that's expected to show a gain of 0.5% month over month and 4.7% year over year. Both numbers are higher than last month, which suggests inflation is not calming down. Oil got crushed on Friday, falling nearly 5% or $4 a barrel to end the day at $79.43 as the recession story takes root and the dollar strengthened even more. And this morning, oil's weaker again, trading at $78.36 while the dollar index rises to 114.52. That's up from 113.20, which makes you ask, what will OPEC Plus do now? They're not going to sit in the sidelines if oil continues to fall. In fact, many are expecting them to intervene. And why would this be important? Because it would be outside of their scheduled monthly meeting. That would be like the Fed moving in October outside of their scheduled calendar. And that just sends a message that somebody is anxious. In this case, it would be the Saudis. The other case, it would be the FOMC committee. Either way, it sends a message of fear and economic concern, and you know what happens then. Remember, we do have increasing demand coming out of China and the whole Iranian oil supply story, which is stalled, so that's both bullish for oil. But if the focus remains intently on global recession and the surging dollar due to the Fed action, then oil will only go lower. And I'm betting that the Saudis are going to say, not now, big boy, not now, not happening. Gold, that's also trading lower as well, falling $3 to $16.52 an ounce, feeling the pressure of the rising dollar, which at some point will not make sense if the global economy enters this recession that they're talking about. Gold is a store of value, and when the shit hits the fan, investors will ultimately turn and buy gold. Okay, U.S. futures this morning are a bit weaker at 5 o'clock this morning as the markets were awaiting the sun to rise over the United States. The Dow futures were down 42 points, the S&P down 3, the NASDAQ was flat, the Russell was off by 3 points, right? But you can now see the sun is clearly coming up, although there's a big cloud cover right above my head. You see that? I wonder if that means anything. And remember, there is a hurricane coming, so European markets are choppy right at 5 o'clock this morning. Euro stocks to France, Germany, and Italy were all higher, while the UK and Spain were just below the unchanged lines. Yesterday, the Italians elected Giorgia Meloni in a snap election, and she would be the first female prime minister of that country and will represent the first far-right government since the end of World War II. And right away, CNN compares this woman to Mussolini, something I think is completely uncalled for and ridiculous. The S&P lost 65 points on Friday to close the day at 36.93, leaving us less than 60 points away from the June lows that we came close to breaching on Friday. The idea that the June lows will offer plenty of support is now a question after Friday's carnage. S&P 3400 may be more realistic if third quarter earnings season proves to be as weak as some are suggesting. Remember, JJ keeps telling us that the economy is strong enough to handle rising rates, something I'm not necessarily sure about. That's true, but that's proving to be, I think, what some will call fake news, and that might cause a signal of weakness, which I've also been warning you about, to become even weaker once earnings season starts just in 2 weeks. You know me, I remain cautious about the coming earnings season. I'm being patient. I'm putting more money to work just in cash, and while a handful of names that I believe are core of a long-term portfolio that are now on sale, and they might get cheaper too. But at some point you got to jump in. You can't really pick the bottom. Remember, we're in a seasonally difficult period of time, and the test lower is still very much a reality. If you want to continue to put your money to work, stick with the big, boring names, right? The ones we talk about: healthcare, consumer staples, utilities, energy, and big tech, right? Always taking advantage of the lower prices. Don't chase anything. The market starts to rally. Don't worry, you're invested. You're going to participate. Don't chase. Let it come to you. Okay, so what are we having for dinner tonight? Well, this is the Garganelli and a sweet sausage tomato cream sauce. This has been one of my favorites, and you should always use it with a short pasta, not a linguine or a fettuccine or a pappardelle. You need a short, robust pasta for this, right? For this, you need the sweet sausage out of the casing. You need 1 large Vidalia onion. You need garlic, olive oil, a can of plum tomatoes in their juice, not in puree. You need heavy cream, dry white wine, and some salt and pepper. You want to heat the oil in a big pot. Add the crushed garlic and 1 diced Vidalia onion if you can get it. If you can't, just use the big white Spanish onion. Saute it until soft and sweet. Next, you're going to add the sausage meat. Saute that until it's brown. Season it a little bit with salt and pepper and get it all nice and brown. Now, once that's done, you want to add 2 cups of dry white wine. Bring it to a boil, let the alcohol burn off, right? Then you want to open up a 28-ounce can of plum tomatoes in their juice, and with your hand, you want to rough crush it so that it's a little bit lumpy still, right? You don't want to puree, you want it to be rough. Bring it to a boil, then immediately turn it down to simmer, stir it, season it with salt and pepper, and cover it, right? Don't go too far away because you need to keep coming back and stirring it, right? So you don't want to, don't go and do laundry. Now you're going to add, when that's done, about 20 minutes, you're going to add a cup of heavy cream. You can use light cream if you prefer, but heavy cream's a richer taste. Let it simmer and thicken, only about 4 or 5 minutes. Again, taste it. If you need to season it with salt and pepper, go ahead and do that. In a separate pot, you want to bring the salted water to a rolling boil. You want to add the pasta, right, that you're going to use. And like I said, you want to use a short pasta. It's better for this dish, like a rigatoni, a garganelli, a mustaccioli rigati. I'm using garganelli today. You want to cook it till it's al dente, maybe 8 to 10 minutes. You know the rule. You want to strain it, reserving a mug full of pasta water. You want to add the pasta directly into the sauce with the sausage and the tomatoes and cream. Stir it, coating it well. You want to add a handful of two of fresh Parmigiana cheese, and you want to mix it. If it looks like it needs more liquid because the pasta is sucking up the liquid, that's fine. Just add a little bit of pasta water to moisten it up. You want to serve it immediately, offering more grated cheese to your guests, right? So make sure you have plenty of grated cheese on the table. Now, on a separate plate, you want to make some traditional garlic bread. You want to use pane di casa, sliced loaf. You want to melt some butter and olive oil, add the crushed garlic, heat it up so that the garlic permeates the butter and oil. Next, using a pastry brush, brush the bread with the butter and garlic mixture and place it under the broiler until it's golden brown. Turn it over, pull it out, turn it over and flip, and toast the bread on the other side. Remove it from the oven, slice it in half, and serve it alongside the pasta. It really doesn't get any better than this. You can also use the dry white wine that you use to cook with as a complement to the meal, or if you want to use a red, feel free to go ahead and do that. I always use the white because I've opened it. And it goes well with this dish in any event. Look, it is going to be what looks like kind of a stormy day. Remember, South Florida here is preparing for Hurricane Ian, which is at the moment off the coast of Cuba. So whether it hits the south of Florida, the north of Florida, one way or the other, we're getting a storm. Until tomorrow, take good care.